Good afternoon, everybody. Good morning, everybody. Uneducated Economist here. So, as the Federal Reserve was raising interest rates, they were putting out these statements saying that they are going to hopefully get support from the supply side as they push down demand. I mean, this was kind of the idea coming from the Federal Reserve. At the time, I said it wasn't going to work because when you start pushing down on demand, the supply side of things doesn't want to come to a hurt customer. And that's what I was saying back when the Federal Reserve was looking for this support from the supply side of things. Now, as I got to thinking about it, it was like, well, if you're not going to get support from the supply side of things, because why would you invest into manufacturing, distribution, retail? Why would you do any of this stuff if you are going to have a hurt customer? It doesn't make any sense. So, in my opinion, the Federal Reserve knew that was going to take place, that the support from the supply side just simply wasn't going to be there, and that the inflation scenario was going to stay elevated for a significant amount of time after that. This is something that I feel the Federal Reserve has wanted the entire time. They don't want inflation to come down. They want an elevated interest rate. They want to get the neutral rate, which is the interest rate in which that the Federal Reserve is neither accommodating nor restricting the economy. They want that neutral rate higher than it was. It was close to zero. It was like 1.5%. They have stated that time and time again leading up to the pandemic, that they wanted that neutral interest rate higher. Guess what? It's starting to move up. The neutral interest rate is now far higher than it was prior to the pandemic, and now this neutral interest rate has now increased the interest rate of everything else that is out there. And now this is something to really think about, because when the interest rates on everything else increases out there, that means the return on investment starts to adjust to the new inflation that is happening. All this stuff is really confusing, but think about it like this. If you are an investor who is anticipating on getting a 2% return off your investment, but then you have an interest or an inflation expectation of around 1%, the real return is 1%. Okay, now if you can lower the inflation expectation, you can raise the real interest rate. But if you raise the inflation expectation, you lower the real interest rate. What if you had anticipated that you're going to get a 2% return, but inflation expectation is 3%? You have a negative return of 1%. Why would you invest into that? You see what's happening here? Now, think about like some of the pork producers out there, or even the mills, like the lumber mills. I follow lumber very closely. I talk about lumber all the time. But when interest rates are incredibly low and you have the commodity incredibly high, the investment going into that increases dramatically. However, when the roles flip and now you have a commodity that is very low in price, but the interest rates are quite high, the return on investment really diminishes. And now why would you invest into this? Borrowing money at a high interest rate to get a return of a commodity that is low. You see what's happening here? Why would you invest into that? Simple case, you wouldn't. Now, I think about some of the things that are taking place now with, like I said, the pork producers, the wheat farmers. You're going to find this taking place with everything that is out there that had a high price to it, that seeked out investment to try and meet the demand that was completely false. That's what's happening here. Think about it like this. This is a quote coming from an article out of Reuters. I think it was Goldman Sachs who had said this, but I may be wrong on that, but I'll leave a link down in the description for the article. It says this: despite weak manufacturing-related demand, right? The manufacturing-related demand, the demand for manufacturing, despite weak manufacturing-related demand, overall demand and inventory data across the commodity complex support our more bullish view, right? So they're looking out there, they see weak manufacturing. Okay, we don't really need a whole lot of manufacturing, weak manufacturing demand, but the overall demand, the demand coming from the consumer themselves, well, guess what? Unemployment is still really low. So if everybody is working, there's going to be demand. Okay? So despite weak manufacturing related demand, overall demand and inventory data across the commodity complex support our more bullish view. There's demand out there from low unemployment, right? People have a job, and the inventory levels are falling because of weak manufacturing. This is the real shortages that are starting to kick in. Now, they don't understand, right? The data across the commodity complex support our bullish view, right? That's what they're saying here. Yet prices continue to move against our forecast. Why? It's because the demand is false to begin with. That was coming from a stimulus package that did not present a sustainable concept to the economy. It was a flash in the pan. When you sever the supply chain, what you will do is you are going to create shortages out there. If you have a supply and demand imbalance, right, where the demand is up from a stimulus package, supply has been cut, then you're going to have prices increase. Now, when those prices were increasing during the pandemic, it wasn't due to shortages, it was due to a lack of supply. The transportation had been severed, right? The distribution network was not allowed to function. Think about all the hundreds of ships that were sitting off the port of LA. All that stuff was sitting out there on the ocean and not being shipped through the country. So that was the inventory depletion setting off the supply and demand imbalance. Now that stuff is rolling through, but the manufacturing is weak. Why? Because the demand was false to begin with. Now we're going back to what is a normal demand, right? Or normal-ish demand, which is nowhere near what anybody had ever thought is existing for the last couple of years, as the increase in demand out there for manufacturing shot through the roof. Think about all the trucking companies that were needed during that whole lockdown distribution breakdown thing, right? I mean, they were wanting to hire the National Guard to move this stuff around the nation. But that wasn't the problem. The problem was that you had that severe distribution breakdown. You told everybody to go home. Mass amounts of people retired. Hardly anybody took on new education in order to fill the spot. The demand for truckers increased. The investment into it shot through the roof. And now you have trucking companies failing. Right? This is what's really taking place now. Same thing. We just talked about it with eggs yesterday. These are the things that are going to start taking place. What you saw happen in lumber is going to find its way out throughout the rest of the economy, right? It's not going to be the same at the same time. It's not going to look the same, but it's going to be very similar. And we're now seeing evidence of that right here. I mean, think about that statement. Despite weak manufacturing-related demand, overall demand and inventory data across the commodity complex support our more bullish view. Right? Everybody thought that the prices of everything was going to continue to go up forever, hyperinflation. Yet prices continue to move against our forecasts because the reality of the situation is far different. How is it that lumber is now returned to its all-time normal level? Right? I mean, a stud, a 2x4 standing and better stud, I remember selling in 2018 for $4.25. Today I sell them for $3.69. It has been that price for months now. Right? If you choose to want to see hyperinflation and that's all you want to look for, then I guarantee you that's what you're going to see. But if you look at the reality of the situation and you listen to the Fed's statements themselves, then you will find there is a much different thing happening out here. Uneducated Economist, you guys let me know.